Happy Easter, folks. We are live. I hope everybody had a really awesome Easter. We had jobs numbers that came out on Friday. We're going to talk about those. What we're going to see this evening on the futures action is the price reaction of the market to the jobs data and the news that's come out over the weekend. And while you don't have any real serious headlines that have come out over the weekend, you're seeing a cumulative buildup of very, very concerning news that is coming out of uh, the Middle East. It's coming out of now France, multiple indications out of France that we have problems that are building not only through de-dollarization, but war. You had the Pentagon Papers that, well, kind of like the Pentagon Papers, that's from the 70s. Documentation that was dumped on the internet, top secret stuff about our involvement with the Ukraine. For the most part, we're running that operation. We already knew this, but it's documented now, and it's probably only going to get worse. So we're going to talk about the potential for, unfortunately, World War III. This is not hyperbole. Uh, President Trump tweeted over the weekend, World War III. That was it. I replied back to somebody who was questioning what that meant, and I think what he was saying is that we're already in it. It's already begun. So we're going to go with the futures action. Let me share my screen, and first let's go to comments. Say hello to people. Allow people to get in here, and we will go to the futures action. Seymour Rivers, good evening to you. Welcome. Give a thumbs up. Yes, please. Thank you. Like, subscribe, whatever you do on YouTube, share. Happy Easter to you, Trader Isaac. Yeah, I agree. Hopefully next year they'll be in jail. Pete, Mr. Pete, welcome. Jeff, happy Easter to you too, my friend. Happy Easter. Larry, countdown for the Kentucky Derby, 27 days, 41 minutes. Horse to beat is 3-year colt named Forte, trained by Todd Pletcher. Is that the number one ranked horse? Or is that your call? Sam, welcome. Dane, welcome. Happy Easter. Sean, happy Easter to you as well. And Randy, welcome. All right, let's get to it. Let me share my screen before I forget to do it, as I typically. Oh, the lovely Jody is here. Happy Easter, Jody. And we are good to go. What we're looking at here is a 15-minute chart of the futures. They're going higher. I can tell you that in the week ahead commentary, I mentioned that I thought that they were going to take equities up higher. They are higher at the open here. You can see that we have a red candlestick. This means that we were higher earlier and that we've given up some real estate, but net we're up spot 1.5%. Moving on to the NASDAQ. Let's clear all this out. The NASDAQ, very, very tight consolidation, 15-minute time frame. We're flat on the session. We were higher, bearish reversal bar. I'm going to do one of these. We see if we close down below support or do we rally back. And there's your upper band of resistance. So I want to know, do we break out to new higher highs? My guess is yes. Now, quick peek. We'll bring them up on the big charts. Where are my Russells? Oh, the Dow, that'll work. Dow futures, they're up slightly. Again, another instance where you have a reversal off the highs of the session. We're only 5 minutes into this week so far, so let's not make a big deal about the reversal bars so far that could easily get resolved and resolved to the upside. Let's take a look at the Russell 2000. The Russell 2000 closed out the day. Actually, this is Friday's price action. Remember, the futures were open up until I think it was 9:15, 9:30 on Friday. So this is the reaction by the futures to the jobs data, and it wasn't yield friendly. It wasn't yield friendly. In fact, I'm going to bring up the yields because you saw the unemployment rate actually pull back, but there was a slight miss on the number of jobs created, allowing for equities to rally. So nice pop here. You got to expect a some price discovery in the markets on Monday morning. It's probably going to be volatile as we're going to get a gap up, unless, of course, we correct hard overnight. Otherwise, we're gapping up tomorrow morning. Because again, this spot 1.5 increase is an increase on top of the reaction on Friday morning to the jobs data. The equity markets were closed, the futures markets were open for a very brief period pre-market on actually normal hours as well. When did they close? 9:15 they closed. Eastern Standard Time. Now, moving on, I want to take a look at volatility. Volatility was really taken out of the market last week. I mean, the S&P 500 closed down last week. You would imagine that volatility would have rallied. It did not. It pulled back far worse than the S&P 500. And oddly or not so oddly enough, while equities rallied on Friday morning, so did the volatility index. So we closed out the session. Actually, we're still going to be down relative to the close on Friday. No, sorry, Thursday. But there was a rally. There was a rally in the final 15 minutes of trade. So net pretty much unchanged versus Thursday's close on volatility. Now, I want to take a look at the US dollar as we always do because we're heavily positioned in the gold mining stocks, gold, silver, emerging markets, and the dollar is not looking good. It is down at current. Let's see what kind of volume we have here. Man, they're just killing it. Now, the dollar on a weekly time frame was down on the week last week, but it held support and it did rally off the lows of the week. So, my commentary to members over the weekend was that we would probably see some strength in the dollar going into the new week. But I'll tell you right now, the Dixie is not implying that at all. Maybe we'll rally back here. But I think the headlines, I'm going to go over the headlines out of Europe over the weekend. And I saw another posting on Instagram that the French are completely backing away from the United States, and Saudi Arabia is really cut. The headline article was they're cutting ties with the United States. So what that means net, I can't just go by a headline. There really is no meat to the article, but apparently the Saudis are opting to form closer ties with China and foregoing the traditional ties with the United States. Say goodbye to the petrodollar, and that is not going to be good for the US dollar. And if it's not good for the US dollar, it means it's not good for the U.S. consumer. Now, taking a look at the 10-year yield. What did I get wrong here? Oh, 10-year yield. The 10-year yield is rising, and it rose. Let's go off this 1-minute chart. It rose as well on Friday. It rallied on that jobs report. So how do we interpret that? Well, we interpret it is that the Federal Reserve is going to have to continue raising rates. The unemployment rate pulled back from 3.6 to 3.5. But we are pretty extended here, overbought on RSI 15-minute time frame. But net yields are very strong, but they're at a level where you could easily see equities continue to rally here, in particular the Q names, the high tech names. The semiconductor names took it on the chin last week. Very, very poor price action. But overall, the Qs look like they want to rally going into the new trading week. And it yields at this level, they can. Once we get up to 3.9, 4%, then they have a problem. Now, I got away from the dollar. Let's take a look at who's benefiting from dollar weakness here. We'll go to the euro first. Where are my euros? There we go. The euro is down. It must be the yen. Yen is rallying, but really not that much. You must have a whole bunch of other currencies rallying against the dollar that normally wouldn't. Brazilian real, that's up. Mexican peso. I would never typically select these currencies, but something's moving the dollar. It's not just the yen. Something else is strong out there. I can't figure it out. Canadian dollar, that's up slightly. That looks strong. Canadian dollar is about to break out. It is breaking out. But what the Canadians have, they have commodities, right? So it makes sense. And commodities is measured by the Bloomberg commodity index. I mean, this is only a 15-minute chart. You start taking a look at a weekly chart. We're getting ready for a breakout here on, we have broken out. I have to stand corrected. We have broken out, and now we're going to do a retest of the breakout point. So commodities are beginning to pick back up. You have the employment numbers that were good enough to keep the Federal Reserve on their toes. So this is not good for those that are waiting for the pivot. So beware here of equities. I think they are going to continue up higher. Should they continue up higher? I don't think so. But that's my own opinion. Let's continue on with commodities, and oil is already putting in a new weekly higher high. This is a very, very bad spot for the Federal Reserve. A very bad spot. Now, we're going to go over the economic data that's coming out this coming week, and a lot of it's going to be focused on CPI. The benefit for the government right now is that you're going to have a lot of earnings reports that are going to cloud out the economic data. But I'll tell you, I don't know how the Federal Reserve is going to ignore oil right now, because oil is a huge driver. NASDAQ just broke out to new session higher highs. So that bearish reversal bar has reversed. We've now taken out the highs. The trend continues. And I think that's going to carry through till tomorrow. And we're going to get a pretty good rally here. But I think what's going to hamper this rally moving forward is the fact that commodities are breaking out, and that is inflation. Let's take a quick stroll back to the 15-minute chart of the NASDAQ 100, which is basically the Qs. And there you have it. A, ver- a very strong breakout. Here's that reversal bar. Remember, we left this chart. They were flirting with a breakdown. A buyer stepped in here and bid it up, broke it out, off to the races. Qs going up higher. Let's go back to commodities for a moment. Let's stick with energy, natural gas. Natural gas up spot 85%. Could hardly see it here. Let's see whether or not we get a higher high on nat gas, because there may be a trade to be had here. I've been very reluctant to trade natural gas, long anyway. So we'll see whether or not we take out the session highs. Sticking with commodities, did I mention that gasoline prices last week rose 6%? Let's go with silver. Silver gapped down, but is now trying to rally back, and I think it will rally back. So looks like there was been a opening bear raid on silver. I think that these shorts are going to get their faces ripped off. So I would have been a buyer of this dip. Let's check in with gold. Gold, same deal here. Big bear raid, a gap down on gold. You know, you could argue it's technical. Okay, I don't think it warrants a gap down like this. So I think that we are going to get a rebound here on gold, and it is going to press up higher. Why? Because uh, the Federal Reserve is stuck between a rock and a hard place. You have an economy that is slowing drastically. You have inflation, which is now threatening to make new higher highs. And that's probably why you're seeing gold and silver gap down, because of the inflation concerns that we're seeing and we're already talking about. And so they're thinking that the Federal Reserve is going to be a lot more aggressive than what one might think. And perhaps they're right. You're seeing yields rally. So I think that's more the reason why you're seeing weakness tonight in silver and gold. It's certainly not the US dollar. The dollar's down, and it's down significantly. And yet the price of gold and silver are getting hit. So clearly, there's concern out there about the Federal Reserve being aggressive, yet it's not reflected in equities yet. Yet. But they will get the memo. Let's stick with, I want to talk about cattle. You know, cattle has been on a tear for quite a while now. And last week, this time last week, we were looking at the chart of cattle, and it had a huge breakout. Let's go to the weekly chart. And here you have it. So we broke out here, follow through here. This is a weekly chart. So this is last week, excuse me, the week before last. This is last week, a complete engulfing of last week's price action. That is very, very bearish for cattle, which is good for the consumer and my New York strip steak. I love that. So, and that's ridiculously expensive. So we'd like to see these prices come in. Egg prices are coming down a little bit. Let's continue on with agriculture. We'll go with the big three. Corn, bearish reversal bar. This is last week's price action. Looks like I drew these lines saying that I thought that this was a bear flag setup, and sure enough, that's what it was. We broke down last week. Soybeans, soybeans broke out. They did a pullback and a retest closing down. Here's your upper band of resistance. Watch for a breakout above 1546 on soybeans. Wheat, wheat is very weak. It's been in a sideways trading range for several weeks now. But last week, every time we hit that 50 period moving average in purple, actually that's the Bollinger Band. I believe that's the Bollinger Band. No, it's not. It's a 9-week exponential moving average. I've been changing my charts around quite a bit. So it's having a very difficult time trading up and above that moving average. Here's the Bollinger Bands up here. That makes sense. All right, so that is it for agriculture. Taking a look at the 30-year Treasury bond, it's looking pretty good. It's stair-stepping higher. So bonds are looking okay. All right. Let's go back to some comments here. Franklin, evening to you, sir. Happy Easter. Seymour Rivers, can we get a look at gold and silver tonight? Yep. Is it too late to buy J&J? I got to get my list together. I have company upstairs, so I'm going to do a hard stop at 7 o'clock tonight. Okay. So we got J&J. TZ Barton, happy Easter to you, my friend. Now, that's a symbol now? Okay. Franklin, DBA on a tear. Hey, Tim, welcome. Okay. Let's go through some data that we had from last week. I've been talking quite a bit about the jobs data from last week, and the market had expected a read of 238,000 jobs. Actual came in at 236,000 jobs. That allowed the market to rally. Right? So technically, we missed. Allowed the markets to rally. They ignored the unemployment rate. Wages stayed flat, and average hourly wages came in a tick. So congratulations to to our parasite, aka elites, that are out there. They're allowing inflation to rise, and the average guy is making less than he was this time last year. Congratulations to the powers that be. Economic data coming out this coming week. Wholesale inventories tomorrow. That's not going to be a big market mover. NFIB, this is small business optimism. Watch the small caps there. The 12th. So we're going to get the CPI report coming out this week. This can move the market. Same day, Wednesday, we're going to get FOMC minutes for March. And we're going to have a bunch of Fed heads out there giving speeches, blah, blah, blah. Watch out for Neil Kashkari. He's a guy that loves to throw bombs and sometimes barking too. Thursday, we're going to get the PPI. That's the Producer Price Index. That's the price of input to produce goods. So basically, are producers seeing inflation? And if they're seeing inflation, are they passing it along to the consumer? For the longest time, they were seeing inflation. They were not passing it along. Now they are. Thursday, initial jobless claims. We get that each week. Friday, a lot of data coming out this week. Friday, we get U.S. retail sales. and a bunch of other ones, consumer sentiment. So a lot of data coming out this week about the health of the economy, but we're in an environment where bad news is good news for equities. They don't want the Federal Reserve raising rates. But if commodities continue to rip up higher, Federal Reserve's got no choice. So valuations going into the week, folks, it's hard to believe that we're still just shy of 30 on the Schiller PE ratio. Still, the Buffett indicator indicates fairly valued, but that's misleading because we are very far extended from the historical trend here in gray. In fact, we are 28.31% or spot 9 standard deviations beyond. So normally what happens when you get your big blow up of the market, we're not just going to pull back the historical trend and stop there. We're going to overshoot and overshoot big, just as we did in 2009, and we'll be undervalued. And that's when you want to put capital back to work. In the equity market, now is not the time. Now it's purely speculative, because when you take a look at yields on junk bonds, they're implying that we're seeing S&P earnings growth slow dramatically. So these are the indicators that we use. We take the cues from the bond market by and large about how we're going to trade this market down the road. I just showed you a 15-minute chart. I just said I think it's going to reverse. It's going to go higher, and we're going to have an up week. But that flies in the face with a lot of data that's coming out and showing that we have an economy that is in big trouble. The stock market has not gotten the memo yet. The path of least resistance at current is to the upside, despite rising junk bond yields indicate negative S&P earnings growth. Despite the valuations of the market, they don't care. And that's fine. That's good for us. We'll trade to the upside, but we're going to be prepared to get net short this market in a heartbeat when the timing is right. So we took shorts off the table last week. We booked profits on the video short, and I think that's it. And we have a whole bunch of premium that I'm probably going to take off the table this week because the 3-day weekend is over and premium has come in. Volatility has been taken out of options quite a bit. So more to come, members. Earnings coming out this week. We have big bank week, and it's beginning to begin, I believe, on Thursday and then into Friday. So we have JPM, Citi, Wells Fargo, the big three. BlackRock comes out. We may trade earnings there. Delta Airlines coming out. UNH comes out. CarMax comes out. Those are the only ones that I'm really interested in. Now, you know, I mentioned earlier as I started off the live stream that you're seeing a buildup of news that really is going to have to make people pause and take stock of what is really going on in this government. You have the puppet master here, George Soros, who's funding DAs in these liberal cities so that they don't prosecute violent offenders and empty out the prisons and prosecute people defending themselves in their house from home invasion. So this is the clown world that we live in. And this guy here is going to succeed. This lizard person, George Soros' son, has visited the White House more than a dozen times since President Biden has taken office. Now, a dozen times. This guy's hardly at the White House. So who's he meeting with? So, and what are those conversations like? What does this guy have to offer the average American citizen? Nothing. So over the weekend, we're getting more and more tensions rising. You're having Israel attack Syria. We're already in Syria. U.S. deploys guided missile sub to Gulf region amid Iran tensions. Why are there Iran tensions? Why? It's because the Saudis and the Iranians brokered a peace deal negotiated by the Chinese. We had nothing to do with it, And now we're going to send subs over there to remedy the problem that we never handled ourselves. We wanted them to be enemies. We were not the brokers on this deal. We could have been. We have given up that seat. Continuing on, NATO holds to hold largest ever air exercises in June, continuing to ratchet up the tensions. And clearly, and this is not getting any press whatsoever, over 100 more classified docs appear, U.S. top secrets from Ukraine to Middle East to China. So basically what some of these documents have shown or proven is that we are far more involved with the strategy of the Ukrainians to help defeat the Russians or push Russia out of Ukraine than one might think. So it's no great shock that we've been helping targets where Russia is occupying Ukrainian land and inside of Russia. Does anybody believe that this time around, if there's going to be a conflict between Russia, China versus the United States, that the United States homeland in any way is going to get spared? This is not World War II. It's not the Korean War. It's not Vietnam War. These are not third world countries. These are highly technical militaries that they're not going to let the mainland United States not get attacked if they are attacked. We are going to feel a lot of the consequences here, and nobody is talking about it in the mainstream propagandist media. We will talk about it here. The funding for Ukraine has to stop. If Ukraine does not stop, if we keep funding them, we're going to war. They want this war. These two lizard people here and here, this guy's not even awake. They want war. They thrive on war. They want the United States brought down. And more joy coming out of France. It's just a never-ending backstabbing. But in a way, I kind of understand it. Macron says Europe should reduce dependence on U.S. dollar. Did anybody think that was not going to happen? I said over a year ago, once we seized and we weaponized the dollar, we seized Russian assets here in the United States, billions of dollars in U.S. dollar reserves the Russians had here. We just simply took it as if it was ours. Did they not think there were not going to be consequences for it? I said it back then. There are going to be consequences. Everyone exposed to the U.S. dollar is going to think twice about having dollars, about having U.S. assets or their assets held in the United States for fear of seizure. So, if the United States doesn't like your neighbor who you just made a peace treaty with, well, we're going to sanction you. We're going to seize your assets. What kind of business is that? We were given a gift from the gods, reserve currency status that allowed us to export our inflation to the rest of the world while importing goods with worthless paper. We've been doing it for decades now. And oddly enough, it was the French that started the run on the US dollar back in 1969 when they said, hey, listen, we want to see whether or not our dollars are really convertible for gold. And France wanted their gold back. And 1971, President Nixon took us off the gold standard. And ever since then, U.S. dollar decline. And what salvaged the U.S. dollar? Kissinger negotiated a deal to make oil out of OPEC only available for sale vis-a-vis U.S. dollars. So if France wants to go buy oil, okay, great. We don't take the franc or now the euro. We take U.S. dollars. You need to go to the Forex market, bid up the dollars, and then pay us in those dollars. That is going away. They're now doing business in yuan. You have France themselves making a deal with this monster of an individual, Xi, and they are waging war on us. And what Macron is doing is he's distancing himself. He sees what we did to Nord Stream. He knows that we were the one that made the money on this war vis-a-vis our exporting of liquefied natural gas, our exporting of arms. They want nothing to do with World War III. Long story short, can you blame them? On this, I cannot blame them. Pedro, is Soros shorting the dollar? He has a family fund. I don't know if he's obligated anymore to show us what he's short of. He doesn't have that fund that he used to have. I don't think. I think it's just a family fund now. But if he takes a big enough position in any one company, he has to report that. But I don't know about currencies. I'm not that educated on that. Okay, ORGN. All right. Let's talk a little bit about seasonality as we go into the new trading week. There we go. And we're going to take a look at both the Qs. Can you please give me this? Okay. Monthly chart, April, a very strong month along with May. Taking a look at, and this is 30 years worth of data. Weekly view, 19 years worth of data. This coming week, we're up 53% of the times. The following week, 58% of the time. So a bias to the upside. Taking a quick look at the Qs. The Qs, same deal here. 19 years worth of data, up 53% of the times, 58% of the times. Same exact for the S&P 500 monthly view. Up 60% of the times. This is not as good as the S&P 500, and up 54% of the times next month. So the S&P 500 generally outperforms the Qs on a monthly time frame for both March and April. So let's now take a look at the Qs daily chart. And what we saw on Thursday was a breakout. And we saw a bullish reversal bar. They tried to take the Qs down. They failed. They managed to close up. So Qs, as we see in the pre-market, are strong. Expect a gap up tomorrow, assuming that the futures hold their ground. Let's take a look back. And yeah, so here was the breakout. Retest one. It's struggling here a little bit. It's a weekly chart. Sorry, weekly chart. Wrong time frame. Yeah, it's pulling back off of its highs. But still, the trend is up. Now, I'm looking to get very, very short of the market at some point in time. But right now, I would love it for it to be, but right now is not the time. But we did see the yield curve continuing to invert last week. So we're not at that red zone stage yet, but folks, it's coming. It's just a matter of time. All right, so triple Q is looking good. Let's take a look at some DWAC. Okay, you got it. Yeah, I heard about that. About 72 warplanes went over to Taiwan. Yeah, it's not good. It's just not good. You know, you got kids, you got grandkids. You got for what? What are we doing this for? You know, Soros' little demon kid is not going over there. Okay, let's begin with J&J. Weekly time frame. All right. So the question was: is it too late to buy J&J? No, it's not too late. You just got to have patience. That's all. You got to wait for a retest. You'll get it. So technically, we broke out 2 weeks ago. Last week, a continuation move up higher. Now, what I have up here on this weekly chart is the monthly 9-period exponential moving average. A pretty good uh, looking chart here. Volume was really strong. Stokes looking good. Remember, you have earnings coming up soon. So one way to trade this may be, I don't know what the options look like here on J&J. Let's check them out. Are they expensive? Do we want to sell puts? It's not. It's as an options trading strategy for just cash flow. I wouldn't make this trade. However, if you don't want to buy at the highs of last week and you want to get them at a discount, what I would do here is I would do this. I would create an alert at the 21 period exponential moving average, and I would wait for a pullback. What you could do here is sell premium, sell puts at that 21 period moving average because you're probably going to get a retrace at some point in time because this is a pretty big move. And right now, that 21 period is at $163.42. We close at 165.15. So you may want to see if they're denominated in dollar increments, sell a 163 put, maybe a 160 put if they're not, maybe a 162.50 put, and you could generate cash flow. And if you have the shares put to you, well, you use the discount code. Right. So that's one way to play this, but I wouldn't chase it here. I never do. You're extended relative to the third standard deviation Bollinger Band. And here's that 21 period EMA right below. So is it conceivable to get a pullback and a retrace back down to that support level? I think absolutely. You're welcome, Pete. J&J is trying to settle baby powder lawsuit. Okay. All right. Next one up now. Weekly chart. This is looking really good. This is a breakout. This is going up. So we broke out 2 weeks ago, continuation move up higher on volume. Very, very good stuff. Stochastics, higher low, good stuff. Momentum is building. These are not just two squiggly lines. They imply how momentum is going. Is it going up? Is it going down? You're losing momentum. You're gaining momentum. This is clearly gaining momentum. So you have the wind at your back. And when you take a look at this chart, we had rallied up and into resistance. We got a pullback. So bravo if you didn't buy that rally and you waited for the pullback. What happened on Thursday? We broke out. So this could be bought. Nibble, then add more on a breakout above resistance. Now, this is one I would be interested in trading myself, to be honest with you. How are the options? Options are cheap. Options are very, very cheap. I would go out to minimum the Junes. And this is one that you could do a bull call spread on, buy a deep in the money call option, simultaneously sell a deep out of the money call option. It helps finance the trade. We did the opposite with a bear put spread on Nvidia, and we did very, very well there. So I would do the opposite here, getting long of now. I mean, it's a $480 stock for God's sakes. So you want to tie up all that capital. So I wouldn't do that. I would use the options. And by virtue of the fact that you're selling a call as well as buying a call, that reduces your buying power reduction. So I don't know what they'll margin you on this, what the margin rate is, 30%, 50%, 60%. I don't know. But I would imagine it's pretty high. It's probably not 30%. So I would look into a bull call spread strategy on this one. That's what I would do. Moving on, DBA for Mr. Franklin. Now, the DBA had a really, really good week last week. It broke out last week. Very strong move. I think we're going up here to 2109. Just keep an eye on the individual agriculture names. A few of them were pretty weak. Wheat not moving, corn a little men's and men's. So beware. Uh, I'm kind of surprised that the underlying individual ag names that we usually go over, soybeans, wheat, corn, they were lackluster. Yet the DBA moved up higher. Let's just make sure that we're not entering a bull trap here. Watch those individual commodities as well. And I would even take a look. I did it one time. I forget what the mix is. What's this basket made up of? Is it 10% soybeans, 30% soybeans? I don't know. But it's going to be critical to know that information, because if you see a break on one, then it could really impact the performance of this ETN. But at current, all things being equal, bullish breakout on the week on volume, daily view. You're going to have resistance above right at $20.72. Good looking chart. I think it goes up higher, assuming that we don't get more weakness on those individual commodity names. And I'm really serious about that. Keep an eye on those, because it's troubling that they're not making any move. So still bullish on the DBA. ORGN. All right. So I think we went over this on Thursday night because this chart looks familiar. Uh, the daily chart looks good. The however is, I mean, the chart shouldn't have changed at all from Thursday night. We broke down. We broke support. In fact, I did go over this chart. We broke support back here, March the 6th, week of March the 6th, attempted multiple times to recapture support, absolute rejection at $4.25. Daily view. We're holding a support level here on a daily chart. It's worth the risk to put on a short-term swing trade, but think about that weekly chart. You make a new weekly lower low. This is probably going to break lower, considerably lower. So obviously, it's going to have to break daily support here at around $3.87 first. If it breaks that support level, I would avoid this like the plague. However, if we open up tomorrow, hold it. You want to swing trade this higher, just put a stop loss right below the lows of last week and keep that loss small. No shame in taking a small loss. It's the big losses that hurt. DWAC for Jody. Now, this is a SPAC. Go away. We're trying to show you where. Here we go. So we closed right at a support level last week. So if we make a new weekly low, I'd have to say, no, don't go near this. You really want to see a gap up tomorrow on DWAC. Big bearish reversal bar. It can't close above its 9-period weekly EMA. Daily view. Daily view, we broke some. You got to avoid this. If it doesn't gap up, it's going down. So I would avoid this one, Jody. I wouldn't short it. Way too volatile. But I would not buy this yet. If it closes back above, let's call it 1350, then it's game on. But until then, this is a show me stock. It's got to show you that it's worth your money. That's all. Right now, it's not showing itself. Maybe we have a higher low here. Maybe we break out. I'm not saying that we can't, but right now, all we care about is what it has done, not what it may do. And we do have a pretty good argument for a descending wedge setup. This could go on for weeks. So just be careful. You're buying at resistance if you're buying now. We broke down on the week. Path of least resistance remains down until it stops. What else do we have? Franklin, you're welcome, sir. Tim, you're welcome as well. Thank you. And we'll go over gold and silver a bit here. Now, admittedly, I think that that's the wrong symbol. We'll use the GLD. GLD. Now, on a weekly time frame, gold has come a long way, but I mean, we can't ignore this breakout and the proximity to us to new all-time highs. I think that we're going to be there by July easily. I think we're going to be at 3,000 by the end of the year. So, and that assumes that the Federal Reserve sticks with quarter basis point rate hikes, which is not going to help anything, or they stop. If they stop, gold is going to rip tomorrow. It's just going to go through the roof because inflation is not going down. It's extended, even if it pulls back a percentage point. If the Federal Reserve does not continue to raise rates, the gold market's going to take over. The bond market's going to take over. And they are going to rip up higher, and the dollar is going to take it on the chin. And inflation gets worse. So gold looks good here. Daily view, it took a pause. No great shock. But I think this is a bull flag setup, and it's going to get resolved to the upside. Very light volume on Thursday. To the downside, SLV. And we are long of paper silver using the AGQ, a leveraged ETF, and doing very, very well with it. We're going higher here. We may get a retest of this support level at around 2264 on the SLV. So this is looking really, really good. I got to tell you, volume's good. It's a good looking chart. Stokes going in the right direction. I mean, there's nothing not to like here. So silver looking very, very good. You are welcome, Jody. Anytime. Daily view. Now we have a little bit of a rejection at resistance. I think this is a bump in the road. I think we're getting resolved to the upside here. Volume could have been a bit better. It was an abbreviated week. A lot of people took off on Thursday. Volume will step back up this coming week. I think that this goes up. The only problem could be is that if yields continue up higher and the bond market prices in more rate hikes, that's going to be a problem for silver and gold. But it should be reflected in the dollar as well, and it's not reflected in the dollar. In fact, let's take a look back. Remember, they hammered gold and silver at the open. So let's revisit how their price performance is in the futures market. Back to a 15-minute chart. They've come back, but the gold is still down nearly a third of a percentage point. And it hasn't had the the really strong comeback that I had expected. Let's check back in with the dollar for a moment. Sorry about that noise. Dollar is coming back a little bit, a little bit. So this is probably what's weighing on gold. Let's check out silver. Silver has bounced back. Silver, nice bounce back here. Oh, this is a beautiful setup. I think silver's going to rip. This is now a 30-minute chart. We had broken out on Thursday. It looks like they're trying to break it out yet again. Let's go back to gold on a 30-minute view. That's a wrong chart. Yeah, not good. So maybe it'll recover by the morning. Not quite sure. Let's take a look at yields. That could be spooking gold traders. Yields are actually pulling back now off their highs. So I'm not going to be the least bit surprised to see gold rally back. Check out commodities. Yeah, this is going to break out. This is the Bloomberg Commodity Index, and it is stair-stepping higher. If this breaks out, I think gold breaks out along with it. NASDAQ futures are now rolling over here, Bet. What am I? I'm on a 1-minute chart. Let's get off of that. Let's go back to the big chart. Something's going on with the equity market. Let's check. Let's go back and look. Yeah. Let's go back to a 15-minute view. Yeah, they're rolling over. Equities are rolling over. Interesting. Let's check out the S&Ps. Where are my S&Ps? What am I doing? Just type it in. Yeah, they're rolling over as well. But still a bullish setup. So I think odds still favor bulls, but something just happened here. So a little bit of a question mark on tomorrow morning. All right, folks. Thank you for being here. Happy Easter. Have a profitable trading week. Please like, subscribe. You know the deal. And God bless. Hope everybody enjoys the remainder of your Sunday, and be well.